Hey there, everyone. Welcome back to DailyCrest, your go-to source for the latest market updates and financial insights. I'm Mercy, and today we've got a hot topic on the table. More trouble ahead for U.S. banks. We're diving into a recent report from CNBC Daily Open that sheds light on the challenges the banking industry is facing. So let's break it down together and analyze what's happening in the world of finance. All right, folks, let's jump into the nitty-gritty of this CNBC Daily Open report. The market roller coaster ride continues, and major U.S. indexes are feeling the pressure. Losses in financial stocks and concerns about China's economy are taking their toll. Not only did U.S. indexes tumble, but Asia-Pacific markets also followed suit, with many regional indexes experiencing a significant drop. On a brighter note, amidst all the turmoil, there's a glimmer of positivity from Japan. The country's business sentiment is climbing, alongside stronger-than-expected economic growth. That's certainly an interesting contrast against the backdrop of these market worries. Now, let's talk about something that's been making headlines: the potential banking downgrade. Fitch Ratings is sounding the alarm, warning about a possible downgrade in the U.S. banking industry's credit rating. If this happens, major banks like JP Chase and Bank of America might be cut to an A+ rating. And remember, this would have a trickle-down effect on smaller banks too. This comes right after Moody's downgraded several banks just last week. Adding to the mix, we've got concerns about higher corporate defaults. JP Morgan's forecast for high-yield defaults in Asia has been raised from 4.1% to a whopping 10%. But hold on, that figure drops dramatically to just 1% if we exclude China property from the equation. This a sign that the financial world is watching closely what happens with that beleaguered Chinese property developer, Country Garden. Shifting our focus to the U.S., consumer spending remains a ray of hope. The Commerce Department's data shows that U.S. consumer spending in July was healthy. Retail sales rose beyond economists' expectations, indicating that the consumer might just be the backbone supporting economic growth. All right, now let's dig into the analysis from Morningstar's chief U.S. market strategist. Despite recent stock sell-offs, the U.S. markets have been on a rally this year. However, their assessment suggests that stocks are still overvalued and overextended. They even have some recommendations for investors on what to consider selling and buying. Time to hone in on some key takeaways here. The financial stocks are having a rough day. Following Fitch's warning, major U.S. banks saw their shares take a hit. Bank of America, JP Morgan, and Wells Fargo, among others, experienced declines. And don't think the regional banks escaped unscathed. The SPDR S&P Regional Banking ETF also faced a significant drop. Minneapolis Federal Reserve President Neel Kashkari's comments on increased capital requirements for larger banks added fuel to the fire. Plus, he hinted at potential rate hikes if inflation bounces back, which could cause further concerns for regional banks. On the flip side, not everyone's losing sleep over Fitch's warning. Eric Dighton from the Wealth Alliance suggests that the U.S. bank system remains sound. He points out that Fitch's potential downgrade could have wide-ranging impacts on individual banks, but the overall health of the sector isn't necessarily in jeopardy. Switching gears a bit, there's some excitement in the initial public offering, IPO, arena. Vietnamese electric vehicle company VinFast had quite the debut on the Nasdaq, with its shares surging from $10 to $22 and even closing at $37. And speaking of IPOs, Kava's shares also soared after its first earnings report since its IPO in June. These positive movements could be an indicator of a revitalized IPO market. All right, let's wrap things up with a look at the market indexes. Despite the optimism from the IPO sector, major indexes couldn't shake off concerns about banks in China. The S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite all experienced losses. If this slide continues, it would mark the third consecutive losing week for these indexes. Investors are holding out hope that this might just be a temporary blip in the market, hoping for brighter days as the seasons change. And there you have it, folks. A comprehensive breakdown of the recent CNBC Daily Open report. It's clear that the financial world is facing its fair share of challenges, from potential banking downgrades to concerns about corporate defaults and market volatility. As always, remember that the world of finance can be a bit of a roller coaster. But staying informed and understanding these developments is key to making informed decisions. That's all for today's video. If you enjoyed this analysis, don't forget to hit that like button Subscribe to DailyCrest for more market updates. And hit that notification bell to stay in the loop. Thanks for joining me, Mercy, here at DailyCrest. Until next time, happy investing.